At the top edge. Now, until that supply starts getting value, it doesn't sell off. So when into the bottom edge, you can see that they stop supplying here and they start demanding here. Well, that kind of makes sense, doesn't it, when you think about it? Think about this as a trade here. I'll take a screenshot and I'll show you what I'm talking about. Okay, so what I'll show you here is very, very simple, very obvious. It's actually straight out of the classroom floor. Straight off the classroom floor. Here it is here. And you can see how this plays out, right, guys? So this is how it plays out, guys. It's very, very simple. So if I drew a little profile chart like this, and you started to see this profile here, if I said to you guys, right, well, when we go above a POC, the market goes, the dealers go offered, okay? So when we go above a POC, the dealers go offered, so they start selling, 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 selling until the value changes, and then they start selling, 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 right? They start selling. And then when it breaks through a bottom edge, what happens? Well, they start closing out the position, right? They start closing out the position, they start buying. And when the value changes, what do they start doing, guys? Buying, 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 buying. So does everybody see that process happening from the dealer's book positioning here? So the dealers are selling, selling, selling as the value is going up. So when you see the dealer selling, you're saying to yourself, right, well, the fair value must be a flip somewhere about this bracket level here, yeah? That'd be reasonable. So you see the dealer selling, 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 selling. The value drops. The dealers get heavy short. So that's when you should start selling into that phase. And then when the price goes through the fair value price, the break-even price in the middle, you see what happens? The dealers start adding liquidity underneath. When the value changes, that becomes your buy trade right there. That becomes your trade right there. And obviously the market rotates back up to that fair value again. And we get two-way money. You can see we've got buy arrows and sell arrows. Now the buy arrows and the sell arrows are because what's actually happening in those areas is we've got the Nasdaq's liquidity book and we've got the S&P's liquidity book at the same time. So the blue candles is the S&P's liquidity book, and the grey candles are the Nasdaq's liquidity order book. So obviously when we see the grey candles at the top edge here, that means there's some Nasdaq selling coming in. When we see the blue candles at the bottom edge here, that's obviously S&P buying coming in. So we're starting to see them selling the Nasdaq, buying the S&P here in the balance area. So they're selling the Nasdaq and buying the S&P in the balance area in this middle area. And obviously as the price goes up, the buyers are still connected. Then the Nasdaq disappears, the S&P disappears, and then they all disappear. So now it's just selling again. So as they come up into the top edge, it becomes just simply selling. So that must be the fair value price there. And now they're selling on the way up to try and take it back down to fair value. And there's it coming back down to fair value. Do you see it? So when the value drops off here, you start saying, right, it's time for me to start selling in amongst that fair value narrative. And you start trying to join into that sell. Once the value drops back out of the trade, your job is to try and join in now with the short trade to take it back down to fair value and then take a new read at that stage to see if it's got any more through fair value at this point here, to see if it's got any more to the downside. As it's now developing beautifully to the downside, you can start to see how that trade is working out beautifully, yeah? So there's where your trades were. There's where your sell trade was there. There's where your buy trade was in the S&P there. And there's where your sell trade is in the S&P there. Understanding the concept of fair value, understanding the concept of a limit order book, how the dealers deal during these processes and periods, and you start to recognize it, you start to look for it, you start to understand this inside of what? Inside of the dealer's range. So if you already know what the dealer's range is, if you understand the concept of the dealer's range, you start saying, right, well, it would be reasonable that the dealer's range would probably stick about 25, right? Why? Because we already established that the dealer's range a lot of the time sticks around the wholesale price levels. So you're already aware that the dealer's range kind of sticks around maybe the 25 up there and it sticks around the 25 there. We're still getting two-way money here, so we're still getting a fair value at higher prices just now. So that's obviously why we're seeing a little bit higher still. But they're starting to add a little bit of liquidity now in at the 23s, which means it's starting to get ready for a bit of a turn again. But the value not with us just yet, but we're obviously going to start hitting this hard for a bit of a short business. If we started to see that bid coming in at 23s, that means that that's the fair value price in the short term at least. So there's 23.75 traded, 23 halves traded, 23 quarters traded. Nice and easy money, right? Nice and easy scalp trade. 23 halves again, 23 quarters. We said fair value is 23. It's missed it by one tick on both occasions. Missed it on both occasions to get that little one tick extra profit, guys. I've taken some profits anyway. I'm currently short, by the way, in case you're wondering. So I am currently short off of these higher prints at 25s. My fair value price is 23s. There it is, through fair value, guys. And I am short just now, making some monies. Beautiful, right? Absolutely beautiful. So where's possible fair value? 20. Where's the dealer bracket low? 16.75. So the bracket low is 16.75. Fair value is now 16.20s. And I'm short. So I'm going to be watching what happens at 16.20. If I'm still getting an offer at 16.20s, I'm going to be taking it down to 16.75 17s. And that's maybe where the buy trade might start coming into play. But I'm obviously booking some profits. The dealer bracket low is 20s, 17, 16 and 3/4. And yeah, I still think we're on that short side of that bit of market. So I'm quite happy with the sell trade at the moment. I still think we're looking okay with this trade at the moment. I still think we're good. I'll sell a little bit more perhaps if we come back up again and we get another transition. I'm looking for that to sell back into, guys. They were at fair value just now, so I wanted the current sale's 27, if you're wondering, guys, 27. So the current sale is actually a way above the top edge, so I'm not using that just yet. I'm not going to be getting involved just yet. The current dealer range is 27s, 21s. Okay, so they're bringing the 27, 21 into play just now. But that's adding that liquidity below, which is keeping me bearish. So I'm selling anytime I see a transition. So I'm currently short. I got a transition at 23 halves. I've sold into this at the moment, trying to get back down to that 21.20 level, which is currently what I would think is fair value against a buy trade at 17s, because I think this is the actual dealer range here. So that's the dealer range just now, 27s, 17s. How do I think that's the dealer range? Anybody? Why am I convinced that that's the current dealer range just there? Because it's 10 points wide, right? So if I see liquidity at 27s and I see liquidity at 17s, that's that 10-point wide range. So I'm always aware of that 10-point wide range, because we covered this yesterday. So when I see them adding liquidity into these areas here, it starts to bring in a little bit more of a magnetized sell, doesn't it? So we start watching that magnetized sell, we start thinking about that, we start considering the probability that that's becoming fair value at 21s, and I start watching for a transition. I start watching for a buyer getting jammed at higher prices, and then I'll lean against it, and then I'll take advantage. At the moment, I'm still not getting any buyers, so they still might want to take it up to 27s, guys, and then we'll look for that short. We've just had a wee book seller coming in there. Okay, we've had a wee book seller. I've got 15 contracts short on that sell. I sold 54s there, guys. Sorry, 54s. 24s. I just sold 24s there, trying to take it down to that 21s again. That's worked out beautifully, hasn't it? That's worked out beautifully. Just for completeness, so that you know what I'm doing. So why did I sell it, guys? Why did I sell it this time? Does everybody see why I sold it? You see that, Mike? Look at the book. See the book divergence creeping into the highs there? That's the transition, isn't it? That is part of the transition process. So we're already aware that there's a book seller starting to show up now. Just there. So obviously, as soon as I started to see business coming into this area here, it's time for me to start selling it. And obviously, my target price was going to be 20 at the bottom edge there. That was going to be my target price. Why? Because that's where we told you fair value was. So my target price was this 20 print here. And we got 20, but the values collapsed. So I didn't take too much off in profits. I'm quite happy just now to trail this a little bit and see if we can make the big breaker down towards the 17s now, right? So I want to try and stick with this short until we get down into that bracket 17 buyer. And then what are we going to see? We're going to see an opportunity. So when we get down to that 17 buyer at the bottom edge here, we're going to see an opportunity to try and take advantage of perhaps a commercial buyer coming in. But we don't know that yet because we're not there yet. So we've got to wait till we get there. And we will get there. And there she goes, 18 quarters. There she goes, 17 and a quarter. So I'm going to take a little bit of money. I'm going to take a little bit of money there because that's the commercial low. That's the bracket low. And you get usually a little bit of a bounce off of that price. So I'm taking a bit of my profits at that stage. And you can see that that's exactly to the letter, isn't it? See how easy it was? You see how easy it was to sell it? See how easy it was to make that call? We got the transition at the right price. We took the sell trade. We showed you it. We've done it. We've got the trade moving. And off she goes. Where's the next trade? Dealer bracket is now 1525s. 1525s, guys. So we're going 15s, 25s. So what don't I want to see? I don't want to see sellers coming in around about 19s at this stage because that's going to magnetize the upside. So I want to see the price trading down to 15s, pulling the 15s and moving down to 11.5. They've moved it to 13s, guys. They've moved it to 13s. Now, they haven't brought the liquidity from 25, so that means they're probably going to re-liquidify. They're going to re-pump up the 15s again, guys. So that looks like it's possibly going to be the deal. So it looks as if because we never moved off the 25s, that's a little bit of a false flag here. If that 13 was real, this offer would have dropped to 23s, correct? Never dropped to 23s. They left it at 25s, which meant the 15 was probably going to be real. So they would have probably iced out the 15s. And you can see the price is bounced off of 15.5. Do you get it? Do you understand that? Makes sense?